Good afternoon, everybody, and happy Thursday to you. Of course, we are in the midst of an initial crash and panic, late at the doorstep of the notorious coronavirus. And I wanted to talk today. Let me just preface first. I have a lot of requests to talk about specific things and investments here on the Rosie Murphy channel. And Rosie, what do you think of this? Should I buy it? I don't do that. I'm going to reiterate again. I'm not a financial advisor. I am a historian of markets as to how they relate in the financial world and impact society. That is something that I've intensely studied, particularly as relates to the United States of America. Okay, so just let me make that perfectly clear. If we learn the lessons of history and study history intensely, we know that human nature repeats itself, and therefore we can sort of get some clues as to what is likely, not guaranteed, to happen. So what precipitates a crash like we've gone through? It's a question that I've received quite a bit. Rosie, what causes crashes? And the number one thing that causes crashes is you have a ongoing economy like we have, and all of a sudden something new comes along that throws off the whole picture of the future in a major way. It's a signal when things crash that there's something very much out of kilter with people's expectations of the future, and the markets do a darn fast job of trying to adjust to that new reality of what's coming. Sometimes they overshoot, as we see. And sometimes they're just the opening overture or crash of what's going to be a prolonged period of distress and trouble for the future. It still remains to be seen on that count. But there is, at the heart of it, the difference between what people perceive the future to be and what the markets in their collective wisdom suddenly see it to be. And, well, we see the market suddenly took a very different and dire look at the future ahead, particularly financially in America, and they did not like what they saw at all. We can't lay this at the feet of the coronavirus, however, because we have to look back, and as I'll show you in the link in the description box below, a weakening of the economy, and particularly the world economy, had been a feature for some time over 2019, particularly through the summer and fall, where more and more fingers were being pointed at China for a slowdown occurring over there, too much investment, too much overhead, too much capacity, and at the same time, retail sales and industrial production were weakening in this country, setting the stage for this difference in viewpoints between what we would see as a nice, stable, good economy and what the stock market eventually saw in financial markets as something to be terrified of. Okay, perception, reality, you separate them enough and you induce things called crashes, and that is exactly what we have gone through. A rapid and scary adjustment to a new world. Now, as far as what stops the panics, information is what stops the crashes and things like that. We have a decline in prices like we had in early February. We had a very feeble sort of recovery for a couple weeks, and then boom, right off the side of the table. And at first everybody, oh, this is a good buying opportunity. I can get in a little cheaper. Then it's like, oh man, what's going on? Why aren't we going back like we used to and rising? And then the third phase is there's something really bad going on. And the fourth phase is outright panic, as the unknown, the great unknown, rears its head and scares people. Because let's face it, there's a lot of information, misinformation out there, and a lot of the future right now is unknowable for people medically. We don't know how closely this will parallel the Spanish flu pandemic of 1918. It's showing some remarkably similar characteristics to it, which would explain the big response that we've had here. But don't be fooled. underlying this was an economies around the world that were definitely in a weakened state and only being propped up because the Federal Reserve kept interest rates so low for so long that it forced people to move money out of savings accounts and push it into things like equity at much higher risk profiles. That's what the Fed thought that would be good for the economy, to force investment, to force companies to take those values of high stock prices and build additional facilities and invest in their business. Of course, a lot of them just ended up buying their own stocks, something they regret very much today, because all of that capital that was tied up in stock buybacks and things, it vanished into thin air. It is, boom, gone, along with a lot of the other inflated values of stocks through 2019 and early 2020. The panic will come to an end. There will be a feeling as all the factual information then begins to come out. And once people know the facts and can start to wrap their head around it and respond, then they feel like they're a little more in controls of the machinery of their future. Right now, they're shaking around violently. People don't have that assurance in their mind that somebody has their hands firmly on the levers and understands in an organized way what the heck is going on. Once we reach that point, people feel relief, and they step back and they let the dust settle and they watch what happens at that point. That's what precipitates the crash and at least the initial recovery. We'll have more to say about the false dawn of recovery, but suffice to say, there's a very good relationship between the scale of a market crash that doesn't unfold in one day like October of 1987, but unfolds over a period of weeks and sometimes months. There's definitely a correlation between the swiftness and the severity of the decline and the ensuing effect on the economy for the future. Let's just say there's going to be a lot of changes made. There's going to be a lot of adjustments, and we're going to really see possibly the folly of having an economy that was built on services which we know are driven by wants and not necessarily needs. Anyway, thanks so much for watching today. Have a wonderful rest of your day. The old Chinese curse, may you live in interesting times. Well, we certainly are now. All right, everybody, thanks so much, and your thumbs up are appreciated. Any comments or questions, put them down in the description box below. And if you're on the channel here, make sure that you subscribe to the Rosie O'Kelly channel too. The link down below to the story from Reuters about a weakening economy, which was posted in early February of this year, is down below, as well as the link to the Rosie O'Kelly channel. Thanks so much, everyone.